All right, so let's get some instant reaction, if we could, with Claudia Sahm, who is Sahm Consulting Founder and former Federal Reserve Economist. She's also the creator of the Sahm Rule, which is a recession indicator that's used by the Fed. Claudia, good morning. Thanks for joining us. So looking at these numbers, it doesn't seem like we are getting any sort of meaningful core slowdown in inflation.
Right, you're correct. I would say, regardless of how these numbers came out today, surprise is like being better, the surprise being worse, we will all admit inflation is too high, right? The policymakers that have tools to bring inflation down need to keep going. Keep going may be to pause and wait and see how the effects of really big interest rate increases have been. But in general, this is not over. And I'd say the CPI is what means something to regular people. Right, the core is something the Fed looks at, but big picture, we have seen a lot of progress so far.
And so in the progress that we have seen from your perspective, Claudia, now moving forward, where do you expect that this perhaps has some type of weight in the conversation even today with the Fed?
Well, inflation would always have weight in the conversation, whether it's too high or too low.
Sure.
Because these numbers came in kind of largely as expected, it shouldn't change the path. And again, they have been very clear that they see inflation as too high. I do think we're getting to a point where the Fed starts risking doing too much. And we have seen some of the Reserve Bank presidents highlight that as a potential risk at this point.
Claudia, there's also been a lot of discussion about where the inflation is coming from at this point. For example, we talked with Paul Donovan yesterday of UBS, who said we're now in the profit-led inflation phase, if you will, where, it's not necessarily that companies are seeing such extreme input cost inflation at this point, but they're going as far as they can and raising prices to consumers. So if that is indeed the case, and you can tell us if you agree that that's the case, that also begs the question of whether the Fed raising will be effective in fighting that kind of inflation.
Right, and I agree that something that we've been looking at more and more is this price inflation. I mean, businesses, it makes sense. If they can raise the prices and they have enough customers, they're going to do it. The fact is that even customers who haven't been very price sensitive, at some point they say, no more. Right, and businesses at that point have to back off. The other thing I would say that's really important and has dropped out of the conversation is we still have supply-driven inflation. Those used cars, that reflects too little in the new car business, and the used car actually shows up in parts of this super core, so the services X housing, because we have car insurance, we have car repair, and those are some really sticky parts of inflation. Again, they're going to make the cars eventually, but we're not seeing it yet. And these are still problems.
It's particularly interesting because I think there was a J.D. Power report out today actually talking about how in the car insurance landscape, you've seen that pushback from consumers, or you've seen that dissatisfaction, and it's starting to show up in other pockets too. So what do brands risk if they continue forward with the excuseflation, as some have called it, and over the long term perhaps damage some of the perception that consumers may have towards them?
Right. The best cure for high inflation is high inflation, right? Because consumers react. So what are businesses risking right now? They're risking customers. Now, in industries that don't have a lot of businesses, they can do this longer. And yet we are starting to see the signs of consumers saying, no, thank you. This is too much. And no longer appreciating this, well, it's supply chains, well, it's the war in Ukraine. Like, the excuses are running out to pull that strategy off.
Claudia, thank you so much for taking the time here as we continue to digest some of the numbers this morning. Claudia Sahm, who is the Sahm Consulting Founder and former Federal Reserve Economist. We appreciate it.